I wanted to run market review just so you could see what I was seeing today. But most of all, I wanted to discuss where we're at and what we could potentially see in the weeks to come. So obviously, we've dropped off pretty heavy from the highs that we created. I believe this day was FOMC over here, and then we went swept these highs on this tip of structure over here, and then we dropped off, take out sell side, flipped the structure, went short, pulled it back up, tapped into this area, which is OB, went short again, pulled it up, OB, tapped it again, dropped it down, and then trickled down to catch sell side levels from the left hand side over here. So with that being said, I was watching this area and how market wanted to open up this week. And I need to duplicate this again. Hang on. So looking at the weekly candle, I was looking at this weekly candle and I was like, okay, if this weekly candle goes bear, right? It's not gonna look healthy on the weekly time frame. Basically, it's gonna look something like this, except this is a much more aggressive gap down. So it would be like a long wick, right? Like a long wick like this, and then the body would start here, and there would be something like this, which would look very weird. So automatically seeing that massive gap down, my original anticipation was that it'll long this week. How far can it long up? Well, looking at the 1 hour time frame, I know I have this gap on the left hand side. I had another gap over here. So I was anticipating for them to run out these highs to a certain degree. Now, obviously, these weren't like this. This is just now NAS 100 Oanda. But if I show you NQ1 had perfect, perfect equal highs right here. So I knew that yesterday, if we dropped down and today can't short off, there's a chance that we'll run for liquidity above these highs right here, especially the fact that it dropped off so heavy last week. Everyone has stops above these two highs right here. So whenever I see London forming this low and it starts rallying up and then drops down into this 1 hour FEG over here, pushes up, balances that, pushes up over here. On this end, I was anticipating a run for liquidity above these highs. However, I just didn't think that they would run it like this. So they did chase out the gap that's over here. They did chase out the gap that was over here that was created in the nighttime session. They chased out the entire NFP range. NFP range is cleaned up. They gapped it down, getting people to think that this week was going to be a short. I said wait for this wick to get swept. Boom, swept, right? But we still have equal highs. Drops down, balances this wick. So if this session can't drop off, then that means this thing is going to start rallying. So with that being said, it gave me very much 2020 vibes. Like just, being in the market for a very long time, it gave me very much 2020 vibes. Like the way that this drop off occurred, the way that they just rallied it. So I went on the higher time frame and I started dissecting the 2020 move. And that's basically what we need to discuss. Is this is the 2020 move down, right? So in total it was 32%. Our move right now is basically 27%. So relatively equal. So the move size in relation to price is relatively equal. So I was anticipating, some type of long structure, and looking at the 2020 model versus the 2022 model, basically it's just doing it a lot faster. So this run up over here to come sweep out these highs, this candle is basically where we're at right now. Now this is on a daily time frame. It's doing it on a much lower time frame. It's doing it on 1 hour. But if you notice this wick and you notice this wick over here, these are the levels that it's attacking. So it's gonna probably attack that within the next few days. I don't know if it's gonna have massive volatility, CPI, going into the end of the week. It could just hang around in the area that it went to already. So just looking at these moves, they're very similar. So I'm gonna put this one over here. Let's go like this. And then let's go here. Let's grab this guy. And we'll go like this. So if you remember on Monday, I said if you're looking to buy long-term stocks, this is probably a really good time to think about, getting into something. So I go daily, daily. So this is the daily over here. So do you see the similarity? Look, we have an original drop off, we have an original drop off, right? We rally back up, we rally back up. We drop it down, we drop it down. We pop it back up, we pop it back up. It drops down again, kicks it in this area for a little while, and then starts accelerating to attack this level right here. So that's basically like we're somewhere over here on this structure right now. Now, obviously, we're looking at a very similar situation. It's not gonna be exactly like 2022, but it's a very similar model. It's a very similar way that the market is setting it up. So, what can my anticipations be looking at the chart exactly how I see it right now? That as long as this daily candles range from here to here sticks, this thing is full blown long past the ATH. Let me show you what happens on the right hand side over here. So if I'm looking at that similarly, then that means we're going to be somewhere over here, right? This leg, look at it, it accelerates above the high. Now you have a high over here. So if I was to consider this, that means that this thing is going to start running up to take out that high and start achieving new highs. And it's not going to be the one that comes back. This is supposed to be the one that just accelerates and it keeps going higher and higher and higher up until the point where 2022 came and cleaned up a portion of the range. But did it make it back into the structure? No. So anything that happens inside of this structure that goes in long term should be stuck forever in time. Is there any questions in regards to anything I'm explaining thus far? Anything that you don't see the way that I'm seeing that I can explain to you further?
For that candle that we just had basically today, how much of that has to stick in order for this theory to be valid? The
Uh,
50% or
I don't even think that they're gonna tap into these wicks personally. They can. Maybe 1 or 2 more days we'll see if it wants to tap into these wicks. But I think that this candle wants to stick and they just want to use the highs of these wicks to start accelerating it up. Now we have tapped this OB right here. You see that? So
good?
if you notice this candle tapped that OB. So we could have a potential drop down on CPI. Friday drops down, gives it a low wick on the weekly candle, right? And then next week, Monday, Tuesday sets it up, and we get that rally going into like Wednesday, Thursday. So then it starts achieving this level, which would be achieving right here. You see that?
Looks very similar.
Now notice, I know we never talk about this, but the EMAs. Look at the 50, look at the 50. Taps the 200, taps the 200, right? Uses
Yes.
the 200 as resistance, uses the 200 as resistance. Drops down to the 800, drops down to the 800. So once this thing pulls back up, and this EMA is going to come down like this a little bit, and pushes past it, and uses it as support, and it starts accelerating up on this side, that's the full confirmation for the long. That this thing will go chase out these highs and continue on higher.
Very cool. In some ways, I think this is all a very excellent technical presentation. I think of news as well. In 2020, you had trouble with the
So
virus, and then it started
same
to come up.
same president in
Yes,
2020. Same president as right now. Trouble with COVID, trouble with the tariffs. Trump comes in to fix everything. Once he starts fixing everything, that's when you start rallying. Once ATH breaks, bye bye. It's gone. It's gone. You see that?
Absolutely.
So I remember back in 2020, one of my friends pulled a second mortgage on his family's house. And when this thing broke ATH after this leg down, this guy just put the second mortgage on the spot. And he caught this entire move and set himself up for life.
Love it.
So again, if you entered a little bit over here, that means you're already ready to average in the cost. So I told you 5 to 10% goes in over here. I would put in another 5 to 10% tomorrow. I would put in another 5 to 10% next week, if not 20% next week. And then once you get this break above over here and it's being used as support to start moving up, that's where you start loading up the rest of the 50% or 30% or whatever you have left.
Sounds good. I appreciate that insight.
So you're averaged out basically from here to here, which is the lower portion of this range. So let's say you're averaged out, right? This is like your last spot. Well, if that's the last spot, then most likely my entries are going to land over here. Any questions?
No, it looks good. And I know we're not big into news, but we all should pay attention a little bit to what's going on with Iran. I could see a war happening there. I think that's why Yahoo was here yesterday. So that could happen soon. Maybe that would just have a few days effect. I have no idea, but just wanted to
So
bring it up.
if we go to war, war equals gold buy.
Ah,
So this is the market review is more of like I'm giving you the anticipation long term. Eric did one for short term, like the shorts, right? Now I'm telling you that I'm long. But until the full confirmation, which is I need to see price push up, take out this high, use it as support, and then start accelerating, or even using this as support. So it would need to break out. Use this as support, break out. Use this as support, break out, and then start just going. Like it
mm,
should, this range from here to here should just start going because everything in here is balanced. Okay? We didn't have balancing done over here. From this point down, we didn't have anything balanced. So now we have balance. We have things that are, everything is balanced. The only thing that didn't get balanced is the liquidity void that was created over here, which we just missed it by a little bit. We missed it by a little bit. But even on this low on Monday, S&P made a lower low and Nasdaq failed to make that lower low. So if today's London session low didn't get broken, then there's a heavy chance of reversal in this area. In which case we saw the massive ridiculous candle over here. 2,600 handles in one day. So on a percentage scale, I'm curious. That's 15%, and this would be around the same.
wow.
So the day that it flips, you get that same exact size here and here. Now do you see how similar they are?
Looks like a carbon copy almost.
Mm-hmm. Crazy.
Rachel,
Trump was the president then, Trump is the president now.
when you're saying buy, are you saying buy the actual physical stock?
You can buy a lot of different things. You can buy big cap stocks, you could buy ETFs, you can buy anything that basically has to do with the indexes. You can invest into so many different things that are related to the indexed assets. but this is the spot that you want your money to start going in. That this range. Now I'm hoping, let's go back. I'm gonna close all this. I'm hoping that on the hourly time frame, we will have some type of drop down. Okay, that's what I'm hoping for. Let me get rid of this drawing tool over here. So I'm hoping that we will get some type of drive down. Obviously, this thing can literally push down into this end dog and then start rallying it to catch this wick. It could do that. Not even break this low, because this hourly candle at 12 o'clock tapped into this FEG. I told you to mark out this sell side over here on the 1 minute. Let's go back to it. This sell side, I don't think we're going to reach this, just because of how close it is to the equal highs that were created over here. So look at this. That. I don't think that this should come back over here. Now,
That was good enough what it did.
it was good enough what it did. And usually when it has a breakout like that, and then you get that retracement right there, and then it starts accelerating heavy like this, there is a very low chance of it getting there. Can we run for something like this? Yes, we can run for something like this. That's suggesting that overnight CPI doesn't run up and then blast up with CPI. We are playing in very, very, very crazy times, guys. Let me tell you that. Because this range over here, let's say like from here to here, 550 handles. Drops down, 396 handles, runs up, 667.
That could be like 4 or 5 months worth of activity.
Yeah, seriously. This is like weeks of price action being done on the 1 minute time frame. So we're playing in very crazy volatile times. So that being said, again, we have to be very careful with our position sizing, the trades that we take, how many trades we take on the day. Like we took 2 trades together today. That's it, done. There's nothing else. There's no point in putting on additional risk on the futures or the day trading side. You take it once, you take it twice, it works. It doesn't work, doesn't matter. We move on until this market comes to a steady. Now, obviously, let's go back to one of these. Obviously, things will slow back down, right? When this thing balances out and it's done doing its little dance, notice the size of these candles and then versus these candles. You see that?
Okay, you're in 2020. Those candles look reasonable. Is that true?
So look at these ones, the size of these compared to the size of these. These ones are going to be a lot better on a risk measuring scale. They're going to be a lot more safe to play on this side versus playing in this area. This area is going to be very dangerous because even these candles were like 500 handles in a time where daily candles were 76, 41. You see what I'm saying?
Yes.
So like look at the size of these versus the size of these.
You have 3 sets size candles there. You have to the left pre-COVID, you have during the COVID problem, and then you have once the COVID problem started to resolve to some
So
extent.
it's better,
Which did you
this
prefer?
side is better than this, but then it starts to slow down when it starts getting a little too extended. Like notice these ones up here. And these drop downs will happen here and there, don't get me wrong, but this area is what we're discussing right now.
Right, so that area that you just circled, you prefer, if you had to pick out of the 3 areas, you like that area the most.
I like this area the
Trading.
most
Good.
because it just balances, moves up, balances, moves up, balances, moves up, balances, moves up. You see that?
Yes.
It just keeps balancing and moving up, balancing, moving up. So we're gonna have a lot of time to dissect this, right? That hey, this is what's balanced, this is what's not balanced. These are the NWOGs that are left open, these are the NWOGs that have been closed. So a really good time in the market is coming. This drop off was very healthy that we had on the right hand side. This drop off was very healthy for us. Now, if it's time to flip this structure, it's going to start giving us a lot of nice lows and opportunities for us to enter this market to chase out ATH and carry prices all the way up, all the way up. So going from, let's say, 22,000 to 36,000.
More than 50%.
Yeah. Anyone got anything else before we close it off?
Armin's got something.
What account do you recommend we put these long-term trades on? Live, Top Step, or Robinhood? Well, you can't put it on Top Step.
Oh,
You can't put it on Top Step. You can't put it. You could put it in on Live, but your Live is basically we come in, you trade the intraday, you take your partial, you leave a runner, and you put stop loss break even. If it sticks, it sticks, and you see how many runners you can leave behind in the days and months to come. Robinhood side, you buy the ETFs, you sit on it. So SPY, Qs, these ETFs. You want to invest into some separate stocks. Yeah, so Robinhood is the ETFs. SPY, Qs, you can invest into individual stocks, big cap stocks like Amazon, Apple, Tesla, bigger companies like that. Nvidia, companies that do well over time and perform relatively equally, if not better than the market. So all stocks should be down right now. Like Tesla is, I'm gonna go to weekly. Tesla is back in this area. So this next time that Tesla rallies up, it should get somewhere up here. So you're looking at a massive move to the upside on Tesla. We could look at something like Amazon. Amazon has already dipped down. We touched 162. We tapped into this FVG on the left hand side over here and this FVG on the left hand side over here. It's accelerated up. So from here, Amazon should start accelerating to higher highs. You have a company like Apple. Apple, look at it long term. Long term, Apple moves up. Okay, Apple moves up. Apple's had a nice drop off. Apple's at 198 right now. Most probably this next cycle will reach 300. Options will be played on the weekly basis, but unless you're buying the year-long option, which you just have to know that hey, once this thing on the daily time frame flips over here and uses these as inversion, so it uses this as support, you know that you're buying year-end contracts and you're running it basically from here to here and above. For the mortgage example you used, did he just buy shares? Yeah, he just put it straight up into SPY and at the time, BTC. So let me show you BTC at that time. So BTC 2020 right here. So he popped it in right here at this price point and he got this entire move up.
Beautiful.
Well, earlier you mentioned something. I don't even remember what the term was. E something. It started with the E, and you're like, they look similar. What was it?
Hmm?
I think
Earlier,
it's about exchange traded funds.
ETF?
no, it was something else. You were showing the 2020 charts and today's. And I can't remember what the fuck word you gave.
EMA?
Yes, EMAs.
They're just moving averages.
Moving averages. Okay.
Something I've used for years, but we don't use it on the daily basis and stuff, so I rarely talk about it. So 50, 200, 800. Those are the ones you need.
50, 200, 800.
Mm-hmm. And the reason for those ones is because they're a heavy period, but also it works in sequence. I'll show you. Look at where this 200 is, right? If I drop down to the 4 hour, it should be the 800. 800.
Mm.
If I drop down to the 1 hour, well, it won't even show on the 1 hour. Let me show you like this.
Because it's
15
like a
minute.
multiple of 4.
So look, 15 minute, you see the, let me see. Yeah. So 15 minute, the 800 becomes the 1 hour, 200. So with the typical time frames, 5 minute, 15 minute, 1 hour, 4 hour, daily, weekly, these EMAs just go one up, one up, one up as the time frames move. So it's a sequence of EMAs that shifts which EMA it is based on the time frame, but they all line up at that same spot.
Very cool. And you like them because they can give you an indication when something is, let's say, oversold.
Not oversold. There are specific structures with EMAs. Let me show you daily. When it breaks the 50, it should move to the 200. When it breaks the 200, it should move down to the 800. When the 800 is held, then that means it's time to rally. You don't have full confirmation until it breaks back above the EMA, uses it as support, and then starts rallying.
How do you find it? How do you find the EMA?
Indicators, exponential moving average, right there.
Oh.
Anything else? You guys good?
I'm good. This was very helpful. Appreciate it.
Alrighty. I'll catch you guys tomorrow.
See you, brother.
See you tomorrow.